Hey guys, thanks for coming back. This is Group 4610 Buyer Blog, and my name is Jason Fleming, and I'm here with Matt Merritt with Bell Mortgage. We just kind of want to share with our viewers a little bit about the mortgage process and the importance of being pre-approved and the difference between being pre-approved and pre-qualified. So Matt, one thing that I've seen is some of the clients that come to me, they have already maybe spoken with somebody that they knew or
Sure.
whoever that maybe ran their credit or something. And I'd like for you to share with our clients here, our viewers, maybe the importance of having somebody like yourself who's going to be very thorough, make sure that all of the I's are dotted and the T's are crossed. So maybe talk about that a little bit.
Well, I mean, a common misconception. Common misconception is if you have multiple mortgage companies run your credit, it's going to impact credit score. Not true. If you're talking about a 30-day span, you can have 100 credit hits on credit, and it's not going to impact you at all. It's going to show up as one hit. And I'm talking mortgage specific. Now, if you're buying cars and credit cards, whole different story. But if you're talking mortgages, you can have 30 different companies look at your credit in a month, and it's going to impact you one time. That's one of the most common things I hear from people is, holy cow, I don't want you to run my credit because it's going to lower my score. Not true. That's number one. Number two, and we said it last episode, the strategic advantage on this thing is you really should get a second opinion, no different than a doctor, no different than a CPA. You should be looking this thing over from multiple angles because not everybody's the same. And I could go into it at great length about the difference between a retail bank, a mortgage broker, and a mortgage banker. And there's big differences in how your loan's going to get done, depending on who you go to. So,
Okay.
Does that answer?
Yeah, that's a great answer. One thing that I see all the time is I've come across people that want to buy homes, but maybe they're right on the borderline of their credit score. They're not exactly sure if they're going to be able to pre-qualify. Whenever you go through and you run their credit, are you sometimes able to look at their credit and say, hey, look, you're right on the line here. If you just do this or you just do that, we'll be able to get you pre-approved?
Absolutely. Yeah.
Okay.
I mean, in the couple of critical credit scores, if you will, if you're talking about an FHA loan, you have to be at a 620 credit score. If you're talking about a conventional, you need to be a minimum of a 660. So to your point, I mean, if you're at a 619, or you're at a 659, there's some easy ways to get you up and over that score and into where you need to be. And it's everybody's little case, if you will, is different. Everybody's credit score is different, and it comes from the factors in your report. And it's easy to do that. It might not take you, but paying something down by $100, it might take you a whole bunch of stuff. And that's the point of getting in front of somebody that knows what they're doing and that can give you that advice.
Yeah, you don't know what you don't know.
That's true.
Absolutely.
It's true. It's the big white elephant in the room. Let's say it that way. I mean, we can talk around your score, but until you've got it and until you know what you're dealing with, you don't know.
Yeah.
And guessing is the worst thing in the world. A lot of people are out shopping for a home on a guess. Big mistake.
Yeah. Saves lots of time to do this up front.
Correct.
And so that you can set yourself up for success.
Correct.
One other thing I wanted to talk to you about was I've come across a few people that they need to close on a loan, and they might have filled out an application with a mortgage broker,
Okay.
and they have no idea that there's mortgage brokers and there's mortgage bankers.
Correct.
Can you kind of just walk us through what those two things are and the importance of using a mortgage banker as opposed to using a mortgage broker?
The simplest, I'll tell you in one word, it's control. Control in the sense that a mortgage broker is a true third party to the transaction. They're taking your file, they're putting it in a FedEx envelope and sending it off somewhere and hoping it gets done. That's the easy answer. Mortgage banker, it's all in-house. So in my scenario, process, underwrite, fund your loan, all under my roof. I've got control, I can push or pull, make it happen when I need to make it happen, and a mortgage broker simply doesn't have that flexibility. They're calling an 800 number and saying, I hope your loan gets done. Again, not a good place to be.
Absolutely, absolutely. If I'm in that position, I'm buying a home, I want to talk to somebody that can go around their cubicle or the next office door over and say, hey, look, let's get this done now. Excellent. All right. Well, Matt, thanks so much for sharing that with us. I think you're going to be around to share about a few more things, and I just appreciate your time.
No problem.
Once again, this is Group 4610. We look forward to working with you shortly.